सा फर्क है। इतना कितना है? इतना है या इतना है? जो नापेगा वो जाने कि जहां धरती और आसमान मिलते हैं, नानकुर से दूर, अगर मगर शायद से दूर, वहां भी दोनों में फर्क बस इतना सा है। धरती और सातवें आसमान में फर्क बस इतना सा है। ये एक अंतर प्रेरणा है। ये हमारी, आपकी, हम सब की अंतर प्रेरणा है। एक कदम, एक छलांग, एक बाजी, एक गहरी सांस और एक ललकार खुली हवाओं में कि हाँ, मैं बना हूं उन फिजाओं के लिए, कि हाँ, मैं बना हूं उन ऊंचाइयों के लिए जो ऊंची तो बहुत है पर नामुमकिन भी नहीं, क्योंकि मुमकिन और नामुमकिन में बस इतना सा फर्क है। धूप छांव में फर्क बस इतना सा है। तो बस चलिए फ्रेंचाइज इंडिया के साथ ये फर्क मिटा देते हैं। फ्रेंचाइज इंडिया।
Hi, good morning, everyone, and welcome. And thank you so much for joining this webinar series called Start Your Own Business, presented by Franchise India. We do this every Thursday at 11 a.m. Today's webinar is about exploring different aspects of starting a franchise business, like how franchising is good, how does it work, why it is one of the safe and the fastest growing business model in India, what to look for in the right franchise opportunity, and some of the real examples of profitable franchise business across industries like food, retail, education, and many more. Whether you are an aspiring entrepreneur, a working professional looking for passive income, or a business owner wanting to expand into new verticals, this session is designed just for you. We'll share insight tips on how to minimize risk and maximize return and evaluate franchise agreements with confidence. My name is Bharat, and I'm joined with Ms. Sonia Chaudhary. She's the Managing Director of Franchise India Group. Shaktivel is the business head, Tamil Nadu and Kerala. Abhijit Das, who's the business head for Pune. And we will also have Vishwas Anand, the business head of Friend Enterprise. By end of this session, you will not only have the clarity on how to start your franchise journey, but also help you gaining access to curated franchise options that suits your investment range and location. Feel absolutely free to ask all your questions. You can share all your questions and you can put it in the Q&A box that you would find on your screen. And of course, we will come back with all your questions, answers once the presentation is over. I'll now request Sonia ma'am to take the lead and let's start.
Thank you so much, Bharat. And friends, a very good morning to all of you. I welcome you all to our session of Investor Advantage. And this is a webinar, like Bharat said, is hosted by Franchise India. And it has been specially curated for entrepreneurs, aspiring entrepreneurs who are looking to start a business. So I'll put a perspective. We'll have a small understanding on the franchise industry at large. We'll take you through some of the most important assessment tools, which are very critical for any business buyer to consider before they start a business or even when they evaluate a business opportunity. And then we'll also take any questions that you have on any particular industry or a category that you're considering. And towards the end of the webinar, we'll also showcase some franchise opportunities. So every week, we'll bring to you a small summary of franchise opportunities that we launch every week and every month. And today we have 5 opportunities that we'll present to you, which are part of our enterprise business. These are some of the iconic brands or the top corporates of India, which includes companies like Raymond's and Reliance. So a small summary on these businesses is something that we would represent. I'm joined by Shakti and Abhijit from our 2 regions. So I'll also request them to share their email IDs and contact numbers for all our friends who have joined in today from these markets can reach out to our leaders. So just to put a perspective, I'll give you a little background also about Franchise India, and equally I'll encourage all of you to write any questions that you have at large on franchising any particular business opportunity. So at Franchise India, we have been in the business for the last 27 odd years, and we started with a mission to democratize entrepreneurship, which means that we wanted to make entrepreneurship accessible to anyone who wanted to start a business. At the same time, we also understand the business buyer of today is not just looking for product information, which is widely available across any platform, including the website of Franchise India, where we have 20,000 companies listed. And these companies are startups to mid-sized companies to large corporates. And every single day, there is a new opportunity webinar that we bring in at 12 o'clock on business opportunity or chai, which we have been conducting for the last 5 years. So there's a big library of information which is already there, available complimentary to anyone who's scouting for opportunities. But we also feel that the buyer today needs to take an informed decision of buying a business. So the value addition that Franchise India brings in is not just sharing the product information, which is franchise fees, brands which are available, but more importantly, what is very, very crucial is the insights on the business. Because buying a business is one of the most important and equally, I would say at the same time, a very difficult decision of a lifetime. And therefore, it requires a very deep research. We need to understand various dynamics which can make you succeed or fail in a business. So it's important that you invest a lot of your own time before investing in an opportunity and study that enough. And this was the ground for us to start these Advantage series, because every single month we receive 100,000 inquiries from investors who want to start a business. And one thing which is common amongst all, because most of the investors who reach out to us who want to start a business, while they know brands which are available, but they have no clue sometimes on what business opportunity is right for them. So how can a prospective investor like you can be an advantage or a benefit to take a responsible decision and informed decision of buying a business is the premise for this particular webinar. And throughout our journey of 27 years, Franchise India has remained investor-centric and a franchise-focused company. And our focus has always been to advise business buyers like you, opportunity seekers like you, to evaluate these opportunities. So if I start giving you a little understanding about starting a business, typically there are only three ways people start a business. One is your own startup. Second, you buy an existing business, which is a resale. Somebody has run that business and they want to transfer that business to a new buyer. So that is a resale business. And third is you buy a name which is tried and tested model, and that is called franchising. So at Franchise India, we work on the latter two, which is obviously the franchise models. And second, we also work with a lot of investors and also a lot of sellers who want to sell their business. So we also believe having a mentor is very, very valuable in your business buying decision, because advisor can bring you a lot of experience on the industry, our validated experience, which we have spent in the industry for the last 27 years, insights, and more importantly, I would say we help you align the interest and we create a balance between you as a business buyer and the franchisor. So Franchise India, like I said, we have a strong team. We are today present in 97 cities across India. So every city that I see a lot of names and friends who have joined in, I will have my local advisors, our teams, our leaders who are available to maybe meet with you. You can brainstorm, have maybe a 30-minute session where you can brainstorm the ideas and block maybe a face-to-face meeting with them. And in these years, we have actually worked with nearly, I would say, 1 million investors, where we have actually facilitated the entire journey of buying a business. And since investor centricity has been a focus, we work to bring solutions for business buyers that are based on a very tried and tested methodology, which we have been following for the last 2.5 decades, which is to advise on the appropriate fitment of the opportunity. And why this is important, because a lot of questions which I come across is which is the sunrise industry or which are the top brands that you think bring the highest ROI. But the fitment can be different for different profiles of people. The objective that you have, which can be your financial objective, it can be your life goals, it can be the involvement of you, maybe your experience that you have on the business at large. So we have created a structure that can help you evaluate what is the right fitment for you. So apart from India, we also run in about 15 countries globally. So our franchise ecosystem today runs in about 16 countries, including India. So we have our teams, like I said, spread across all the emerging markets, India subcontinent, which includes also Sri Lanka, Bhutan, Mongolia. We are there in Thailand. So anyone who wants to set up a meeting, I'll request all of you to please reach out to us. And before I get started, I'll also request friends, if you can also share a bit about yourself and some piece of information which will also help us understand where you come from, what kind of opportunities you're looking at, help us know you better. So if you can share with us in the Q&A box, maybe the city that you come from, where you want to start the business. Second is the investment that you want to make. If you have a broader understanding of the investment bracket, you can put that investment bracket. And third is the category that you are keen to invest in. It can be as broad as food. It can be as specific as if you think you want to start a bar, you want to start maybe a QSR, you want to start maybe a specific category, you can mention that also in the Q&A box. So like I said, franchising actually creates a lot of intelligence synergies because it brings in the combined strength of both the company, which is a franchisor, and also the franchisee who's partnering with the business opportunity. So collaboration and meeting of minds of both the stakeholders is very, very important to make the business model and overall business very, very sustainable. So franchising cuts across every industry, and we have seen, and I'm sure all of you would also agree, that we have seen successful franchise companies across all sectors, be it F&B, be it retail, be it education sector, be it healthcare sector, be it beauty sector, wellness sector. So hence every business I would say is good, but you as an investor or a aspiring entrepreneur, you have to find your own fitment of what is right for you, which has to be based on a very inclusive approach and yet a very integrated approach where you put together a lot of important understanding around a business. So we've created this structure, and I'll start with giving you a little understanding on these tools. So there are 5 important assessment tools that we take into consideration, which I would also advise every single opportunity seeker or a business buyer to take into consideration. Bharat, can we have the screen presented? So these assessment tools are very, very important because a business, to start a business is not something which is easy, and even more difficult is to make that business successful. And especially for the first time business buyer, there are many questions. And today, when I look at our community of people who are looking to buy a business, and out of, I would say 1 lakh inquiries that we receive every single month, 60% of these people are first time business buyer, which is a very big number. So which means that 60% of these people who want to start a business have no prior experience of running or operating a business. And 40% people who come to us are people who have some form of experience, either they're running franchisees or they're running their own business. So these assessment tools are very critical for your decision making. And this starts with first and foremost your own self-assessment. Second is the industry that you want to get in. Third is the market where you want to start the business. When I say market, it is just not about a city or a state, but very deep micro analysis of the market where you want to start. And finally comes the assessment of the brand that you have selected. So when I talk about, and what we've done, we've also created a 25-point analysis. Maybe we can go on the next slide, please. So we've created 25-point analysis on these assessment tools, which will help you delve a little more deeper into these. And so I'll explain all these 25 points, but if you have a score on these 25 points and you have a tick mark of 1 on each, 20 or more score, if you get, the opportunity that you have selected is excellent, great. If you have a score which is anything upwards of 15 but less than 20, it is good. But if your overall score under these assessment tools is less than 15, then we don't advise you on that particular opportunity. And this is what our teams at Franchise India advisors have been working the last 27 years, where we handhold you through the entire journey of buying a business. And broadly, there are 3 stages of starting or the entire journey, which starts with first and foremost, I would say, information stage, which is very, very important for any investor before you delve into and maybe, jump into taking a decision of starting even a single opportunity or a brand that you have selected. You need to first and foremost be informed on the various opportunities which are available in the market. So the first stage is information stage, which is discovery stage, where you discover these opportunities based on own personal fitment, which can be your investment appetite, any experience that you bring on the table, operational time that you have to bring on the business. And third and fourth is the market assessment, which means what kind of opportunities would be relevant in the market where you want to operate. And second stage is the evaluation stage. So based on the information, the profile fit, our teams then work to evaluate the opportunities which are best fitment across these five assessment tools and your own personal fitment. And then comes the stage where we also work with you to get you personal meetings with the on discovery days with the decision makers, the management, the founders of these companies, which includes a personal meeting, which includes a complete presentation on the business model, which also includes some testimonials or discussion with their current franchisees, and also a tour of their existing centers, locations which the company runs. So all that becomes a part of our entire journey, which typically takes for any investor anything between 30 to 90 odd days, depending on your urgency to start the business. Our team at Franchise India aligns ourselves based on your investment and timelines. So the first tool is that of self-assessment. And self-assessment, I believe, is the most important tool for any aspiring entrepreneur. And you need to assess things like your own two things, which I say is your life goals and your business goals. These two goals have to be aligned when you step first into discovering these opportunities. Find out what you like to do. And most importantly, sometimes we take decisions based on our own passion, but you need to figure out how that business will make a financial sense for you. So when I say life goals, these are life goals which are related to our life events in our life, which can be short-term, mid-term, long-term commitments we have. And the business goal should be able to align with the overall life goals. So when I say financial goals, there are three things which you should write and consider when you do your own self-assessment, which is first and foremost, I would say the timeline for you to achieve that goal. Like I said, the short term, the mid-term, or a long-term goal. Second is the risk that you are willing to take on the investment you're putting in the business. And third is the return that you expect. Now, here it is very important to understand that the risk and the rewards are very proportionate to each other, which means higher the risk, higher are the returns. If you're looking at a business investment which has lower risk, equally your returns will also be low. So a lot of investors come to us who are looking at opportunities which give them some kind of minimum guarantee. The company operates the business, and these are typically people who are little settled in their life, people who are 50, 55 plus, who have enough wealth, but they don't want to put their time. And they also understand these businesses might come with some kind of gestation, does not have their involvement and operational time being involved. So, which also means that companies hedging your risk, they're putting their operational time. Your returns on these businesses comparatively would be lower than businesses where you put your own time into running an operations. So if you look at the asset classes also where we put our investments, there are typically three asset classes which are the fundamental goals of, I would say, our investments. So when we look at these asset classes can be categorized into three goals. One is safety, second is income, and third is growth. So which means if you're looking at safety of your investment, your risk and reward would also be proportionate, which means I need my investment to be safe. So which means you have low risk. Equally, your returns are low in these businesses. Income are businesses where you will have moderate risk and moderate return, and growth centric businesses would involve a higher iota of risk but equally rewarding returns for the investors. The third area is capital, which means the kind of liquidity that you have to invest in the business. The thumb rule that we follow is 50-50, which means that you need to bring at least 50% of your own equity in the business, and 50% can be a softer loan. But I also advise, especially first-time business buyers who are looking at making a small investment. When I say a small investment, this is any investment which is lesser than 40 odd lakhs. You should bring in a higher equity because the cost of capital in India is very, very high. And this is also the biggest reason for a lot of business failures, which is lack of financial management. So 70-30 in case your investment appetite is say 40 lakhs and less. But otherwise, a thumb rule that we follow is 50-50 is your equity and 50% is the soft loan that you can get. And the fourth area is the involvement of your time, because in franchise businesses, if you look at globally also in India, most of the franchise businesses, 95% of the businesses are franchisee owned and operated by franchisees, which means that you will invest in the business, but more importantly, you will also put your own time to run and operate the business. And there would be 5% odd businesses which are largely high on investment, and these are opportunities which can be K-12, it can be maybe a larger format like a Yostha, which is a Reliance format. It could be a brand like Zudio, who don't need any of your involvement in day-to-day operations of the business. All they need is somebody who can bring in the right real estate and the capital to invest in the business. So this percent of businesses, which is called franchisee-owned company-operated business, largely would form 5% of the entire portfolio of all franchise opportunities which are available globally and in India. But 95% of businesses would need a larger quantum of your time involvement. And we call somebody an operator partner who bring in at least 4 to 5 hours minimum in the business to operate. And here we also advise if you have somebody in your family, your partner, your friend, your inner circle who can also be involved in day-to-day operations, the responsibilities with the business can be split amongst the stakeholders at your end. And then comes the assessment of the industry, which is again very, very important. So when I say the assessment of the industry, there are a couple of things that you should understand, which I would say starts first and foremost with how big is the overall opportunity size. So which means that is it big enough to be addressed? There are certain times opportunities which are overcrowded. You have a lot of players already in your market. Sometimes the opportunity is commoditized. You don't bring any advantage bringing any particular opportunity in that market. It can also be you as a business owner can have the first mover advantage bringing that particular brand or opportunity in your market. So look at the overall opportunity size and what dent can that brand opportunity that you have selected can make in that market is very, very important. And second are the growth prospects. Sometimes we invest into opportunities, but we don't have patience, especially in businesses. You require minimum horizon of 5 years. But depending on the horizon of these opportunities and the life of these opportunities, these growth prospect can be 15 years, 30 years, 40 years, especially if I talk about industries like K-12, hospitals, and even fuel stations, right? They have a very long horizon. Typical agreements which are signed with these companies can range anything from 10 years to 30 years. So the future fitment of the opportunity is very, very important. And then comes the demand and the supply in the industry. And this is where we have to do a lot of detailed micro market assessment and analysis of what are the current players in the market. And when I say current players in the market, it is not a combination of only the local brands, but equally larger brands which are operating in the market and also some strong regional brands which are very, very strong in the market. And there are a lot of players regionally which are more stronger than sometimes a larger player, which can be a regional or a national player. So we need to understand who are these players in the market and the opportunities that you are considering, are they kind of filling any gap in the market? And this gap can be in the form of services being offered. It can be the price points being offered. It can be technology at large, which the other brands are not fulfilling, but you can fulfill through the opportunity that bringing in the market. So how do we do the market assessment? We need to look at overall, like I said, need gap, which involves analyzing your current market offering to the extent they are meeting the consumer needs is very, very important. And this gap can be, like I said, in the level of service product as well. So find if you are able to close that need gap. I'll give an example. Recently we launched a brand called Easy Gym. This is a brand from UK. It is part of a company called Easy Group, which is a listed company at London Stock Exchange. And this company also runs their airlines, which is EasyJet. And Franchise India, we signed up as a master franchisee for this brand in India last year. And our very first outlet has opened up now in Model Town, which is a very, very competitive market. And that has all the brands one can think of, from Vault to Anytime Fitness and all the other Delhi-based companies and national brands already existing in that market. So we understood, the current model, the format these companies were running, what their offering was. And we came out with a proposition, which was a very compelling proposition for these customers, consumers, members who were already consuming these services from these companies. Even before our launch, which happened last month in the month of May, 4th May, we launched our outlet. And we started marketing about 2.5 months back, where we were soliciting interest from a lot of members in the neighborhood. We had almost about 1 crore of memberships sold in the market even before the launch of the gym. And we had a very compelling proposition from the size, the format, the offering, which was important enough for a lot of these consumers taking these services to convert to a new opportunity. And that is something which is very important also for all of you to understand. So when you open any new business in your market, it is not that the needs of the people are not being covered, right? So if you open maybe a coffee shop, people are consuming. If you open maybe a gym, people are already using a local gym. If you're opening a salon, people are already going to these salons. You need to find how do you address, and is there a compelling proposition that you can also work with the companies to offer in that particular market, right? So we need to understand that. And then comes the regulations, which can be your regulations on that industry. Now, regulations are both a center subject and a state subject, which means your liquor license policy, your F&B policy, your drug license policy for opening up a pharmacy. So what your state guidelines talk about, these regulations are very important to be adhered. And then comes the real estate selection. Again, I will say the most important thing in selection of a real estate is find out where your top competitors are operating in the market. The example of Easy Gym I gave, we opened in the most competitive market, and we were in fact the last entrants in that market. We had all gyms operating at different price levels. When we opened up, most of the gyms around, they actually lowered their membership fee to accommodate and not lose their existing members. So look at the existing players in the market, the top players, so what they're doing, what locations they're doing, and just open next to them. So when I say next to them, which means you already have an audience which is available in the market. So the outlet that we opened up in Model Town is just opposite, it's just 2 steps from Easy Gym. They're just facing each other. And then comes the competition assessment. So which means that what competitive advantage is the opportunity that you have selected is giving against the other competition in the market? How deep is the penetration of the brand? What value proposition that they bring to the market? How the brand performance has been maybe overall at the India level, and specific to the markets also very important to understand. There are some markets where some companies perform very well, but sometimes when they're new to a market where they have not gone, their performance might not be as great. So you need to understand the penetration, the performance of their current centers, which can be owned by the company, can also be owned by franchisees. And what differentiation are they bringing is very, very important to be established. And then comes the assessment of the company that you have selected, which includes things like the legacy of the brand, how committed they are, the credibility of the founders who are behind the business, and things like how standardized are their systems and processes. Because as the companies begin to grow and eventually scale, they need to be more and more process oriented, because your deviations can be reduced. It is easy for a franchise partner to replicate the business model, and more importantly, it helps you to bring in a lot of operational efficiencies in the business. And then comes your cost of operations and reinvestment. So when I say cost of operations, I mostly see franchisees or aspiring entrepreneurs mostly negotiating on the margins, franchise fees, but rarely I've seen people actually understanding how the operations costs are, done by the company, how these operating costs are structured by the company, which is very important to understand. Now, operational costs are typically your cost of rental, your salary cost, your cost of goods, your electricity cost, the royalty that you have to pay to the company. And also every year, these operating costs also escalate, which is natural inflation. Your rental would increase. You also have to understand, is your sales is also increasing in proportionate to the operating costs or not? And then comes the margin on the business and the ROI. Now, these are also very, very subjective. No margin is less or more. There are businesses where even a smaller margin is big enough. There are businesses sometimes where even if you have a bigger margin, it might still not cut. So let me give an example. So if you look at jewelry as an industry, the margins in the business are very low, right? But you play as a franchise partner, you play on volume, value, right? So when I say value, the value of the product is very, very high. So even maybe a 15% margin or a 18% margin, which is largely on diamond, and maybe a smaller margin, which is 4 to 5% on gold. And typically in a jewelry business, your blended margins are anything between 15 to 20%, little higher on the lab diamond category. So these businesses play largely on the value, and they're businesses like maybe a supermarket, where again your margins are very low in this segment, but you play on volumes. So which means if there are enough volumes, your business will make financial sense. And then comes your return on the investment. Return on the investment is also very, very misunderstood term. And again, the thumb rule which everyone should understand, any company which gives you ROI calculation, you have to see the horizon of that opportunity. So when I say horizon, so ROIs are typically calculated on the life of that opportunity. If the life of the opportunity is say 5 years, 10 years, 15 years, 20 years, that's how the return on the investment is calculated by the companies. So some businesses have a high gestation, like example of a K-12 school. A K-12 school takes minimum of 6 years to break even, because your infrastructure is not built on day one when you start a K-12 school. Rather, it is built in 5 years, right? So when you look at your return on investment, you have to see when is the optimum performance of that business triggering in. So in case of K-12 school, it takes almost 6 to 7 years for that return on investment to come in. But for other businesses where your term of the agreement is say 5 years and you're running maybe a coffee shop or maybe a gym, your ideal ROI should come in a span of 3 odd years, which is a very good ROI on the businesses. And then comes the legal considerations. Now, in India, we don't have any franchise law and we work on a British contract. So every single clause which is written in the agreement has to be rightly negotiated with the companies. At Franchise India, we also have a separate outfit, which is Fran Legal, which also works with investors, our investors who can reach out to them to vet these agreements and support them in negotiation and closing of these agreements. And finally comes your training and the support given by the company. And like I said, when you take training from the companies, always bring in somebody from your family or your inner circle who becomes a part of these training and distribute the responsibilities, which largely are, I would say, business development is one of the most important responsibility and which ideally should be kept with the franchisee himself. Second is obviously your finance, and third is operations, which is day-to-day operations of the business. So these are very important, critical roles for running a business. Actually, these three roles, if you have somebody in the family, should be split so that you can focus on each process to make the business very, very efficient. So we'll take you through the next slide. Can we go to the next slide, please? So these are three stages, which is negotiation, closure, which is 3 and 4. So information stage is where we give you options based on your profile, based on your investment appetite. And when I say there are 4 fits that we take into consideration, what you see on the screen is SOMA fitment. So this means strategic fit. S stands for strategic, O stands for operational fit, M stands for market fit, and F stands for financial fit. So strategic fit means what you bring in the business beyond your capital, right? So capital is something which everyone, any investors looking to invest in a business would bring in capital. But what kind of value addition you bring in the business beyond the capital is very, very important. And that is what a lot of companies also consider when they approve the profile of partners. Now, this fitment can be your property. So in cases of brands, a lot of Reliance brands today are expanding. Their most important requirement from investors is looking for a prime property in a real estate, in real estate, which is a retail property which they own and operate, own themselves, but the company takes care of the operation. So second is operational fitment, which is the time involvement that you have to put in the business. Third is the market where you want to, M stands for market, is the market where you want to operate the business, how the business viability in that market actually works out. The company also works, and rather Franchise India team also does a Reiki to understand what opportunities are best suitable for that particular market. And then comes the financial fitment, which is largely the investment you want to make, which is a mix of two, which is the initial investment, which is capex investment you put in the business, and second part, which is very, very important, which most of the franchise this is the working capital. So whenever you start a business, if you have say 100 odd rupees to be invested, I would recommend you put 65 to 70% in the business and 30% keep aside for the working capital, at least for the first 3 to 4 months period. Stage 3 is where after the evaluation of the opportunities, we set up meetings, discovery day, tours with the decision makers, which includes physical meetings, virtual meetings, tours, meeting with their franchisees. And then once you've selected the opportunity, we go to stage 3 and 4, which is we help you negotiate, we help you structure these deals and help you sign up with the agreement. And like I said, typically the time frame which requires is anything between 30 to 90 days. So most of the business buyers, and especially the ones who are looking to immediately start the business, this is the average time which any business buyer takes to start a business. Next slide, please. So I think so this is typically, so when you work with Franchise India, while we have a lot of people who reach out to us, and there are a lot of free platforms, including our exhibitions, our website, our webinars, where you can research opportunities. But we also have special services for investors who want a guided solution where we handhold them through the entire process of buying a business from all the 4 stages which we talked about, where we'll give you a single point of contact who works with you, who takes and I would say curates these opportunities. You get assistance from day one till the time you close, industry insights, is something that we share with you. We also give you access to a lot of our monthly events. So every month there are 15 events that we conduct, and there is one large exhibition that we conduct in one big city. So this month, last week, we just concluded our Chennai show. We had about 7,000 investors who came from largely South, focused on TN and Kerala market. So all our registered investors get access to all our exhibitions and smaller events free. And a lot of advice that comes to us, given by our teams to our investors, it is done through a tried, tested structure. It is completely data driven in terms of what business these companies are doing. We also do a big competitive assessment for you. So if you say these are 4 companies, our teams will go back and also do a competitive analysis of 4 or 5 opportunities which are selected and share that with you. And which and negotiation, like I said, legal support, guidance you get from our fan legal team. So all this process is something that our teams at Franchise India takes care of any investor who takes these guided solutions from us. Next slide. So if while I'll also request, if you want to, block maybe a brainstorming session with us, I'll request all of you to please reach out to us. We can maybe block 30 minutes with each one of you. So these are different plans. We have a 6-month registration. We also have a 1-year registration, and we also have a 2-year registration structure with us. Now, this is based on the investment you want to make, which means that the deal structuring, especially for high investment deals, takes a little longer duration, and it requires everybody from the top level to down our teams to be involved in every day with our investors. And based on that, we have created these 3 structures of 6 months, 12 months, and 24 months. Typically, 24 months registration is done by a lot of HNIs, people who are looking at maybe master franchisees, area franchisees, or very high investments. So there's a separate team depending on the investment categories, the cities that you want to take the franchise for. We have different set of capabilities and teams that work with each of our investors. Thank you.
Right.
Next slide.
Yeah.
So what we'll do now is maybe we can also share this screenshot with all our investors. So typically, like I said, our structure of our registration is based on the investment you want to make, which starts at about 30 odd thousand for 6 months. And then we have Advantage, which is a period of 1 year, which is 50,000. And then we have Premium Investor, which is about 1 lakh as a registration. And then we have a Gold Club, which is actually 5 lakhs of registration. Largely ultra HNIs, mid-sized companies take that kind of registration when they're looking for a bigger opportunity. Some international brands, when they want to own and operate as an area franchisee or a master franchise for India. So I'll request if you need more guidance on this, please reach out to us. We'll be happy to explain this entire structure. So we'll take the next maybe 10 minutes where Vishwas would lead 5 top opportunities that we want to present. And we'll be happy to take any questions also from all our investors. Vishwas, over to you. So friends, if you have any questions, please write to us. We'll be happy to address. And I'll also strongly recommend that you fix maybe a 30-minute session with our teams. We have your coordinates with us. 30-minute session can be fixed up at our offices. We can also do a virtual meeting to get any of your queries addressed. Vishwas, can we have the screen with your presentation?
Yes.
Right. Meanwhile, I would also request Shakti and Abhijit, if you could also share the number once again to the audience. Anyone, if you would like to get in touch with us to talk, further in deep dive discussion, then of course you can get in touch with those numbers. Apart from that, I would also be sharing a centralized number of Franchise India. You can also, connect with us on those numbers, or you can also write to us at feedback@franchiseindia.in. Yeah.
Okay. So thank you, Sonia ma'am, and thank you, Bharat. We just discussed about the investor acquisition. Now I'll give you a snippet of how the enterprise brands can help you to engage these customers, because I take care of all the enterprise brands, the major large conglomerate which has the national expansions. And this is the snitch count, and I will cover 5 of that brands. So I'll start with this is a BPCL initiative. It is a food and beverage initiative from BPCL, Bharat Petroleum Corporation Limited. So as you know, BPCL is a Navratna company of Indian government, and is a PSU. So The unique feature about this brand is it's a zero rental F&B business. So in any F&B, the major part is the property and the rental of that property. So this brand helps the investor to be rent free, run a rent free business, and also a property free business, because property is the location is be assigned by the company itself. So they open this cafe at their own COCO outlets, company owned, company operated outlets. All the capex has been done by the company itself. So you're seeing the picture right in the right hand of the on the screen. So they developed this kind of a cafe, a 600 to 700 square feet ideal cafe on this, and you can understand that to building this cafe, it requires around 50 to 60 lakhs rupees of capex to design this kind of cafe. So entire capex has been taken care by the brand itself. So when I'm mentioning low investment, so low investment means कि you as an investor has to take care of the movable capex. So all movable capex like AC, furniture, crockeries, oven, Mary Chef, and all these things. This has to be taken care by the investors. And yes, of course, they have a franchisee fee, which is a 4 lakhs rupees, and some security deposit, which is refundable 2 lakhs rupees. So it comes to around 20 to 22 lakhs rupees of total investment to own this store.
I'll also add, friends, this is a partnership, so which means at least 50% of the investment is brought in by PPCL, and all these locations are available at their fuel stations. We also have these locations. If you're interested, you can reach out to us. We'll be happy to share these available locations with all our interested investors.
Sure, ma'am. So, as of now, we are having some around 14, 15 locations readily available, and some more locations in pipeline. So the density is like we have some 4 or 5 opportunity in Karnataka, basically in Bangalore and Mangalore. And then we have some opportunities in Kerala. Then we have 3 opportunities in Punjab, 1 opportunities in Uttarakhand. So spread across the country. And for details, I'll share my number after this call, so you can come reach out to me directly for this. It's a FOFO opportunity with some, the payback will be around 12 to 13 months itself, because it is in F&B, the margins are pretty higher. So the cost of goods sold is only 35%, and rest around 32% is the cost of operations. So net return will be around 28 to 30%. So this is the snippet of this brand, and I'm moving ahead to the another brand, which is another legacy brand from Raymond's. It's Ethnics by Raymond's. It is the ethnic wear by Raymond's, just like Manyavar, Devo, Tasva, and other brands. So Raymond has their own specified different category of brand, which is called Ethnics by Raymond. So currently they are having 164 outlets of Ethnics by Raymond's running in country. Brand started in 2019. Get little slowed up in COVID, but after COVID they have accelerated very well. So as of now, 165 stores running. A different category, so very high average order value. It's not, you'll not find a lot of people on the store, but people walking in with a very genuine buyers and on a very high average order value. So people buying it for the entire family, or maybe entire marriage, or entire related occasions with the marriage and other festivals and all. So the very good brand. So no risk of the inventory. All inventory is taken care by brand itself. So they ideal size required for this brand is around 1,000 square feet. So the capex cost will be somewhere around to 3,500 to 3,200. So ideal capex will be 35 lakhs rupees in 1,000 square feet, and security deposit of 1,500 rupees per square feet for the inventory, because in any store having 1,000 square feet, you will be needing an inventory of around 70 to 80 lakhs rupees, or in season it can go up to 1 crore rupees of inventory. But brand takes care of everything inventory part. So as a franchisee investor, you don't have to worry about the inventory part. And also brand gives 6% interest on this 1,500 rupees security deposit. No franchisee fee. Ideal payback will be around 30 to 32 months. It is also a FOFO operations. Few COFO options are also available in Hyderabad, Agra, so at Punjab. So I can be reached out with that opportunity also. This is about Ethnics. Then we have 4 more brands of Raymond's, and these are into all men's fashion wear and casual wears. And but split it into 4 different categories on brands. So Park Avenue is quite an old brand, and then we have ready to wear brand RTW. They spell it as ready to wear. It is a comparatively new brand compared to other brands of Raymond's like Park Avenue Color Plus. And Parks we have a brand up a slightly lower mid category where the range starts from 600 rupees itself. And in other categories, the range starts from 999 or 1299 itself. It's a loved brand by youth and professional with good paying capacity. A lot of innovation in fashion, like they are presenting some, wrinkle-free products, some rug-free products, and other and range of categories and fabrics. Same modality, security deposit with interest, 1,500 rupees per square feet, and they will give you interest also 6% on the security deposit. Same capex, more or less 3,200 to 3,500. In Parks, the location, the property can be at 600 to 700 square feet, while in all other three brands, the mandate is around 1,000 square feet. Model is FOFO, and as I've shared that COFO is available on selected locations, so I can be reached on personally in case somebody interested for COFO. When I say COFO means the rental part taken care by the company, and rest all the operations taken care by the investors. Moving on the third brand, which is Pepperfry. This is yet another exclusive enterprise brand. A very eloquent brand and a very lucrative business model where you can run a handsome franchise furniture business without owning any furniture warehouse. So when furniture comes in your mind, it comes that you have a hefty showroom, a large showroom and a big size for 5,000 to 20,000 square feet go down. But Pepperfry give you the leverage to run this of franchisee of furniture with just 1,000 square feet of area and arranging more than 1.5 lakhs of inventory. Because Pepperfry is a marketplace which caters more than 450 brands. So it is not only Pepperfry, they cater Zudio, they cater Godrej, they cater Oakwood, they cater Neel Kamal, they cater or international and national brands also. And they have their own, warehouses. So no need to be worried on the partner brands. So they carry their own inventory. So the model is like it's a studio format. They create a studio and experience center for a customer. Customer walk-ins have a look and feel of few of the demo stocks available, and then with a serious consulting of the consultants which have been already trained by company, customer makes a choice, and immediately with EMI options and payment option and credit card options, immediately billing can be done to the investor, and delivery logistic installations and supply chain, everything is taken care by the brand. So investor don't have to worry about all these things. And the investment is less than 30 lakhs rupees, which includes franchisee free demo stocks, softwares, billing software, hardwares, everything. So everything come under 30 lakhs. Ideal payback is around 20 to 22 lakhs, 22 months. And the returns is around averaging 16% on the sales. So and the ticket size is high because if customer is coming up, the average ticket size is 40 to 50,000 rupees. So average stores is doing 20 to 25 lakhs rupees per month. Average stores. There are stores which are doing 50 lakhs also per month. So this is something very exciting and a new age business. And I'm moving ahead to another brand, which is the Performix. Performix is a sports athleisure brand from the house of Reliance. It is a pretty old brand. You find this brand in the SIS of Reliance Trends and Reliance Footwears. But from last 1.5 years, they have launched the EBOs of Performix. So yet another brand with a very limited investment capacity. So you can start a Performix store with 31 lakhs rupees of investment and 9 lakhs rupees of bank guarantee. This 9 lakhs rupees of bank BG is for this inventory which the brand is putting in your stores. Again, the inventory is taken care by the brand, so it's on a SOR model. SOR means sales or return model. So you don't have to worry about the inventory. You don't have to worry about the wear and tear and the aging of the inventory. Brand takes care of all these things. The category is growing. We have seen the success how Decathlon has evolved. So they are also trying to build a mini Decathlon sort of thing in a smaller, retail space. 27 to 28 months payback. So good returns. They are giving 30% flat payback on sales, and then some 3 to 4% sales incentive, which depends on your, visibility and customer service. And then 6% staff support. The overall sales, for 6% of the overall sales, they will give you the staff support, the salary support. So overall 40% margin, and that to an SOR model, it's one of the highest payment in this category. All right. Moving ahead to Yousta, this is yet another fast fashion brand from the house of Reliance. and it is in FOCO model. FOCO means all the operations and all the salary, staff, rent, maintenance. Sorry, rent is not covered. It's everything is covered by the brand. The investor is the franchisee owner is just the investor, and that too in an initial investment of the capex and bringing his own real estate into the business model. So Yusta move ahead with investors who are having their own property. The property requirement is 7,000 to 7,500 square feet in a top in a good retail area nearby to some good retail market, or maybe some good degree colleges where we have good youth crowd hovering around. As I mentioned, it is a FOCO model, a very good revenue sharing model. So they give an average of around 10 to 11% of revenue sharing per month, and go for a store where their projection is 90 lakhs to 1.25 crores per month sales to start off. Sign up fee is 5 lakhs. Total investment is 2.5 CR, which includes each and everything from the capex, AC, fit out, fire licensing, electricity setups, DG setups, everything it's covered into 2.5 CR. They are also looking for tier 2, tier 3 towns. So basically, they are following the footprint of Zudio. So Zudio is now 10.5-year-old brand, and this brand is just 1.5-year-old. So already 32 stores in running. Now 38 stores in running, and some good 8 to 10 stores in making itself. So this is about Yusta. It's a fast fashion category, everything under 999, and 65% portfolio under 699. So this is it is a very growing category in fast fashion. Customer have the experience of the fashion of across categories: men, women, children, and apparels, shoes, and some gadgets, belts, purses, wallets, everything under 999. So this is the category. So Bharat, these are the snippet of the 5 brands which I'm going to cover today. Although I have some around 17, 18 brands which I can cover later in another session. So I wanted to cover these top brands as a part of my enterprise portfolio.
Thanks,
Thank
Vishwas.
you,
So friends, if
Sonia.
you're interested, you can reach out at Franchise India. Like I said, we represent all franchise opportunities across all industries. You can reach out to us if you need more information. And I shared a link also. We have a webinar of a company which is one of the leading salon brands from south of India. It is a brand called Autumn Salon, which we are starting dot at 12 o'clock. I've shared the link. If you want to attend the webinar, we have the leadership team of the company coming and presenting their business model. So thank you so much. Have a great day ahead.